Hello again. I thought it would be an excellent opportunity to show two separate methods of trading that I use. The first method being the target type trades, and the second method being the trailing stop loss type trades. And for any given market, you'll have opportunities usually to enter both types of trades interchangeably. And Friday's market gave a good opportunity to show when those two techniques are used. And as always, I've got it. I'll show how I've got the buy bracket and sell brackets set up. I've got the stop losses set to 5 points, and so I've got the buy stop and sell stops set at 5 points. That's the risk we're taking for the trade. So if it comes back against us 5 points, we'll be out of the trade. That's a $100 loss. So you don't want those stop losses to get hit before the targets get hit, which are the sell limits and the buy limit, which I have set to 3 points. Now on Friday, we could have easily set those targets to 5 points because it was volatile enough, but I didn't know that at the time. So I started off the day with the 3 point targets because it's been low volatility lately, and we're just now getting into really good volatility for trading. Friday was an excellent day. So that's how I have those set up. And basically, I'm using the market replay program, and I've got the market just before it opens at 6:30, and I've got it frozen here in time. And I've got the market replay program up here, and it's covering my account number, so I can post it on YouTube. And I'll just keep it up in that spot. But this is a really excellent program. If you have this particular broker, they provide this tool, where you can record your markets and then later trade it as if it were a live market. And this is a really excellent tool that I use all the time. Anybody who has this broker, I recommend using it. It's just really an excellent way to learn the market. Now, I'm not doing this from memory, although I did watch the market on Friday. I'm not doing this from memory. I'm just using the method as it would be applied in a live market, because you can't really possibly remember all the intricate moves it makes anyway. And so I'm just strictly applying the method, and I'll show where the method applies and how I'm reasoning and how I'm using it as I go along here. So with that said, I'll just go ahead and start the market playing here. I have it set to 1.5, even though you'd think that normal speed would be 1.0, but I find 1.5 represents, for some reason, represents a more accurate speed as you would see it in real time. And where I can, I'll zoom it ahead so we don't waste too much time. But this should be a very exciting market to watch, because it's really starting to get into the good volatility again, and where it really becomes excellent trading. It's not too volatile to trade, but it's also not low volatility, which is a hazard also. So Friday was a really good day. So what we're seeing here is the opening of the market at 6:30. The U.S. market opens, and what we want to do is wait for the first fractal to form before committing. And the fractal has to be in the current market after the open, because the characteristics of the market before it opens aren't really true to the way it's going to look after the U.S. Open. So it takes on a whole different character. And sometimes lately you've been able to, if you're really quick, you can trade that open of that where the last close was on the previous bar. You could trade that first open and get away with it. And so in this case I would have been able to buy and hit the target pretty quickly. But I'm just going to strictly stick to the rules here and wait for the first fractal formation, which is the 1, 2, 3 formation. I'll just pause it for a second and look at the market model here. We're looking for a P1, then it'll make a P2, P standing for point, then it'll come down and make a P3 point, and these are the hardest to determine. The way we determine the P3 point, I know this is kind of reviewing things, but the best way to determine that P3 point is to wait until you have movement up back into the trend direction. And if we were trading, if we had all the time in the world, we'd look for a 25% move back in the direction, and that would be our entry point. But since for day trading, since you have to do things quickly, we're looking as close as possible to the 8 EMA line, which is that blue indicator line. So yeah, the most important thing is first you're alerted to the trade by seeing the P2 point form, and then you wait for the P3 point form, and then enter as close to the 8 EMA line as you can. And that's our system for entering the hooks. And the hooks always occur in between 1, 2, 3 low patterns and 1, 2, 3 high patterns, or 1, 2, 3 bottom patterns, 1, 2, 3 top patterns. They call them both things, tops and bottoms, or highs and lows. That's how they're generally referred to. But basically, these hook patterns form in between those 1, 2, 3 tops and 1, 2, 3 bottoms, which are like bookends. So continuing here, that's what we're looking for right now. We're looking for it to come back down into a 1, 2, 3, and then enter the trade as close as possible to that blue 8 EMA line. So that's what I'm looking for. I just sped it up here for the sake of time. Okay. Sometimes this is frustrating because as you see, it's not making a lower low. It's just a continuous rising lows in an uptrend here, and so it's not offering an opportunity to get in the trade yet by the rules or by the system. So you just got to be patient and wait for that retracement or pullback to occur before you enter that trade. So here we get a reversal. See how it closed outside the Bollinger Band line? That's usually a sign. If you get a close right here and then a reversal down back through the line, that's a good sign that it's about ready to it's a good sign of, well, made a P2 point right here, and so now you're looking for the P3 point, which will occur if it falls below the previous lows. So it hasn't formed yet. So that would be an inside bar where it's not made a higher high, it's not made a lower low. So I usually call these inside bars. Sometimes you can trade the close of these, but in this case you want to be safe, so we'll just, on these first trades, so we'll just wait for the number 3 point. which so now let me slow it down a little bit so we don't miss it. But as you see, what we're already seeing all this information in advance. We already know it's made a this is somewhere down here is a P1, P2 at the top here. We already know that that point has been put in place, and so now the trick is making sure that that's not just going to drop, and you want it to start coming back up, and so you're trading momentum. So when I get a break below a low like that, or in an uptrend, I want to see some interaction with that 8 EMA line. This would be the 8 EMA indicator, exponential moving average. And so I want some interaction with that line first. And so right here, I'm going to start looking to trade the to go long at the next opening if the momentum's upward. And you can see here, the other thing I'm looking for is if that 8 EMA line is starting to really bow inward. But because this is a new trend, I'm suspecting that we'll at least get one or two long trades out of that. So that's the initial hook of a new trend. So we're pretty good probability we'll get a good trade out of that. So I've slowed it down to 1.5. We'll start it up again here, and I'm looking at the countdown timer. Normally I would go by here, but since it's on the market replay, this is going to be the accurate timer, so I'm waiting for it to hit see, right now it's at 45, 6, 7. I'm waiting it to hit the new minute and be ready to be a buyer at the open. So we've got some negative movement. I'll wait for that movement, but if it comes back through the previous close, I want to be a buyer here. So that would be a same bar entry if that comes back through that close. You'll see what I mean here. I just want to see momentum going in the trade direction before I enter that trade, or assume that that's a P3 point. There we go. Okay, see how when you're trading momentum like that, you save yourself a lot of headaches having to wait through adverse movement. And even then, I waited for it to start moving up again before I entered that trade. So I didn't have to deal with any adverse movement. In actuality, sometimes you can get two trades on the same bar. Whoop. That's probably not going to go, so I should have got in earlier than that, but I was talking a little bit, so yeah, I should have waited the same as the last bar for the movement upward through the previous close. So we'll see if that gets hit or not. I'll just exit that trade. If you don't like a trade, you can always hit the exit at the market button there. But I still see that this trend is up, so I'm still trying to do the same thing. We know that the here, I'll pause it for a second here. Going back to the trade model, we know that the target for this particular formation, for example, P1 to P2 is a certain distance. It should, according to the trade model, be equal to the same distance as P3 to the target. So that gives us a rough estimation. The reality, it doesn't always happen exactly like that, but it gives you a rough idea of where your target should be. So it gives you an idea of whether you can enter that trade. somewhat off the line, off that ADMA line, because we know what the distance to the target should approximately be. So let's continue with that. So that tells me here's P1, P2, so that tells me that the target is going to be somewhere up here, so that's going to give me room to enter another long trade, even if it's not directly on that ADMA line. So that's my reasoning on that one. I'll continue here. Yeah, I think I missed that one. That would have been successful if I had just done that again, but you miss a few. But you can see that's approximately at the 25% level right here, if we're looking at that as the P2 point. But we've got this anomalous bar here, and that's the difference between reality and the model. Sometimes you just get other factors thrown in there that you're just kind of looking at with more of an artistic eye. That okay. See, my thinking there is I knew I was probably going to get at least to the 3-point target. All right. So we could actually get 2 or 3, actually 4 trades out of that distance from the P3 to the new target here. So that shows you that the volatility is pretty good. I'll just go ahead and speed it up again. See, if that's a number, that's a new P3 point. Ideally, I'd want to see that open closer to that ADMA line. The closer you can get to that line after the P3 point's made. In this case, it was different because we knew that there was some distance to the target. So I actually, after that P3 was made, I knew that I was safer entering, somewhere at some distance away from the ADMA line. But this is right at the new P3 point, so I want to see it closer to that P3 point before committing. And this is at the second hook, so we're starting to get a little bit when you get about 2 or 3 hooks, I'm starting to look for that EMA line to start bending inward a little bit towards the 14 period simple moving average, which is that magenta line here. So let's continue. Okay, see how it's starting to narrow there? You really become sensitive to that narrowing. So now I'm starting to look for a possible trend change. And the other factors here are you're starting to see the Bollinger Band cap over like that. And when you start seeing the Bollinger Bands start coming together, start narrowing, that's a sign of decreasing volatility. Again, implying a possible trend change. So you're starting to be cautious about it. My policy is that I can never really enter the trade when you have you want to see it widening, like down here where the ADMA is widening out like a crocodile mouth opening. You want to see that widening before you enter a trade. That's the way it's it should look. But when you see it narrowing like that, you've got to start being very cautious that you're looking at a possible trend change there. Okay, I'll slow it down back to normal speed here. See, I'm really starting to see we got the crossover of the line here. That's a sure sign right there. So, yeah. What I just did there, ideally you'd want to get right closer to the crossover and you'd want to wait a little bit longer, but if we were looking at this as a, let me stop it again here and look at the trade model. See, if we're looking at the trade model here, if you see this 1, 2, 3 point, this would be the new number 2 point, and when you see it drop below that new number 2 point, I don't really have a good cursor here to show it visually, but you can kind of see what I'm talking about. The 1, 2, 3 top, see where it says downslope? You want to see that 1, 2, 3 formation in the new trend change, and if you see it from the number 3 point here start dropping down below that number 2 point, that's a very good sign you're looking at a trend reversal right there. Plus you have the ADMA line starting to cross over the 14 simple moving average. So you have those two indications right there that the trend is changing on you. And so we'll just go back to the chart here. And what I did is I dropped the target to demonstrate a trailing stop loss strategy, which is actually the most efficient way you can trade, but those are harder to enter because sometimes you have to wait for it to come back against you. So yeah, we're already up $280, and it's not even 15 minutes after the market opened yet. Now we're up 400. So at this point, you don't need to continue that trade in risk. So I'll move my trailing stop loss. Here would be the see that red dashed line? That's the average position line. And so anything below that line, that red dashed line here, is the profit zone. So I move the stop loss down 1 point below the profit zone to protect that profit at least. So I know if it comes back against me and takes out my stop loss, at least it'll be I'll have made some profit for the trouble. So that's $20 right there. But I can see it's heading down with a lot of momentum here, so it's a good bet that we'll be able to move the stop loss down. See, at this next bar, I can move the stop loss down now to 1 tick above the high of the previous bar. So now I've locked in about $60 or $70 here. So this is how simple a trailing stop loss strategy is. You just keep it's probably the most relaxing way to trade once you're in it, because all you have to do is move down your trailing stop loss as the or move up it, depending on if you're short or long. So in this case we're in a downtrend, so all I'm doing is moving that trailing stop loss down behind the market as it moves down. Same thing if you would do in reverse if it was in an uptrend, but we're in a short trade here, so this way you're just letting the market decide how much it wants to give you, you know. And I just got into this trade by simply dropping my target by hitting that X right here, and that cancels out the order and drops the target just like this. If I wanted to cancel that, I would just hit that, and so we see the orders canceled. But you always want to trade with a stop loss, so I'll just put it back in there by left clicking on my mouse. I just created a new stop loss order right there. And see how here's the current price bar, current market action. All I'm doing is trailing one bar behind it, above the one tick above the high of the previous bar, and just following it down that way. So that was a really good drop right there. Not even at 7 o'clock in the morning, 30 minutes after, and we're already up over $600. And this is just one contract trading, so see how looking back in retrospect, I got in right at the crossover of this ADMA line as it crossed over the magenta line. See how accurate that was in predicting trend change right there. It's really amazing how it pinpoints the exact point of where the trend change occurs, is right where the ADMA line crossed that magenta 14 SMA line. And you can see, if you did nothing else but look for these and just trade a trailing stop loss strategy, you do very well. And that's a really simple form of trading, but you could do that and do very well. Almost up $1,000, and it's not even 7 o'clock in the morning yet, according to the times in the charts. For demonstration purposes, I'll just, even though it's kind of tedious to keep doing this over and over again, I'll just go through a couple trend changes so you see the different types of trend changes. Oop. So I got out of that. So I'm out of that at 775, and now I'm looking for the new I should have moved it down. I was kind of sleeping. Right, it should have been got me out right there of that trade. So currently I'm not in the trade, and I've locked in the profit. And so now I'm looking for the next trade to the downside here. Basically, what I'm looking for is the same thing I look for as the number, looking for the normal number 3 points. And but notice the distance it has to travel after it broke above the high here to the ADMA line. I always take note of that distance because that's a strong sign of a trend change, possible trend change ordinarily, but since we're looking at such a strong downtrend here, I'm expecting that it'll probably come close to that ADMA line and it'll bounce back down. And you can see over here on the 5-minute chart, we've got a close outside the Bollinger Band here. And anytime you see that, expect the next bar to be a reversal bar, which is what you're getting right here. See how it reverses right back through the Bollinger Band. I'm looking over at the 5-minute chart here, and so that gives you a larger overview of what it's actually doing. If so, on the 1-minute chart would be our equivalent to our minor swings, but you can see the way the markets work is that simultaneously with the minor swings, it's making larger intermediate swings, which are visible on the 5-minute chart. And this gives you the bigger picture. So that kind of governs how you're looking at this chart. So we're seeing on the 5-minute chart, it's in a very strong downtrend, but it's in a retracement right now. So 5-minute chart will probably see a retracement somewhere near the ADMA line on that chart, and then a continuation of this downtrend because the downtrend's so strong. We're just looking at a pullback or retracement right now, and so that tells me what to do on the 1-minute chart. I'm looking for a bounce off that ADMA here, and then for it to head back down. So I'm getting prepared to sell again. So I'll start that up here. Okay. It's a nice thing about not live trading, you can stop it when you want. But see how we're just, it's so steep, it's almost like looking at the laws of physics here. You see that it just can't maintain that upward movement, so I'm expecting a bounce back down, and I want to trade the if it shows momentum downward. I'm really starting to suspect it now. I'm suspecting that that's a number 3 point right there. See how it's moving? The tick is already moving down, and we're coming up to our next bar opening. So right there, even though I'm some distance from that ADMA line, I am suspecting there's such momentum. Look how steep that ADMA line is downward. So it's got, and it already broke through the support here. So, whoops. I wanted to do a trailing stop trade. So normally I wouldn't enter the trade again there, but I didn't cancel my target, so because this is a trailing stop, I'll keep it above previous resistance. Support and resistance are at all scales, so you could look at support and resistance as being a large scale, or between at the high and the low of each price bar is a resistance and support point. So to keep your stop loss out of trouble, you want it in a trailing stop loss type trade. You want it above, in this case, since we're in a downtrend, you want it above previous resistance. So we've got enough profit built up to where I'm using a larger stop loss here. So I'm taking greater risk, but we've got the money to do it. So, and we're already in the profit zone below the average position line, which is that dashed red line. Anything below that is the profit zone. And now I no longer need continuing at risk in this trade, so I pulled it 1 point below the average position line. If it starts looking too close together, you can always increase the scale of your chart so you can see it better. Normally I'd wait for the new price bar to form, but you can see it's so far away from, this bar is so large that I don't have a problem moving it as it's moving down, because obviously it's moved down fairly far, so I can, sometimes you can move it down on the same bar it's making its move. Some people, sometimes you can even trail on the 5-minute chart, and because it tends to reverse much less. If you look at the point where the crossover occurred on the 5-minute chart, we didn't have to even get out of that first trade. We could have just stayed in that trade. But I like to usually trail on the 1-minute charts, have a trailing stop loss on the 1-minute charts. So not even 7 o'clock yet, and we're up $1,400. That's probably a reversal right there, though. I'll just let the market get me out this time. Usually, if it's going to reverse, it'll make a smaller price bar, and not a big long one like this one. Okay, it's kind of making a wedge shape here. A lot of times you'll see these wedge shapes, they form to a point, and then you'll see a breakout. Once it gets to the point of the wedge or the triangle, you'll see a breakout either side of that. But in either case, we're going to probably end up getting stopped out of this trade here. So looking back, it would have been already there technically. It probably got me out because that's a little bit above the high there. So if this is a 1, 2, 3 bottom formation, the next thing I would be expecting would be a leg down. A leg down, and then it would be higher than this leg, or this low point right here. And then it would move back up and break above the high. And that would be the trend reversal formation. Or this just could continue down. You never know how far the market's going to go. And so the idea with the trailing stop loss is you let the market tell you how much it's going to give you. So that looks like let's just get out there, because it looks like a 1, 2, 3. Sometimes you do that and it'll continue and break right down below the previous low point and continue the trend. So it's a judgment call. You know, if you're happy with your profit so far, you might want to just get out at where you think it's the lowest. But I see where the market would stop me out would be way up here, so I didn't want to give up that profit there. So I just exited at the market. And I'm no longer in that trade, but I'm looking for a crossover now. So I'm getting ready to buy. I still don't like the look of how steep. I like to see that AME line, ADME line. I have problems saying that word. I still like to see it slope inward towards the 14 SMA line. Right now, see, it's starting to make that slope. You could probably get away with a 3-point target here. And don't want my stop loss getting hit, and I've got enough profit where I can risk it, so why not just move it out of the way? I feel that target is so close. And I'll show you what I'm doing here, what my rationale is. If we look at the some of the models here, the way trend reversal can occur, if you look at the one in A, this is essentially what we have going on here, where the 1, 2, 3 has occurred before the 80 above the 8 EMA line in this case, because we just reverse this in our situation where we're looking at going from a downtrend to an uptrend. In this case, it would be going from an uptrend to a downtrend, but it's the same thing in reverse. So in this case, it would be like A, where you have the 1, 2, 3 occur before the 8 EMA line. In that case, you can trade as it crosses the 8 EMA line, because we've already got the formation made, and that's the key. You want to base your trades on that formation being made first, rather than the crossover being made first, because that increases your odds. So we've already, in this case, we see that the 1, 2, 3 has been made, and we now get the price bar crossing over the 8 EMA line. So that's a pretty good high odds bet right there. So you can see the rationale for using that, or for entering the trade right there. Got a pretty good move against us though, so that's a riskier trade, you know, because you're looking at wading through some adverse movement there. All right, so we're back to, because it's still in such a steep, if you look at the 5-minute chart, we're still in just a retracement back to that 80 EMA line, but we're still in a very strong, very steep downtrend, even though it's pulling back. So in this case, I don't want to use the trailing stop strategy on the 1-minute chart, because I'm only expecting to be trading the pullback that's occurring on the 5-minute chart, if you see what I mean there. So this is where the I go back to the target strategy. I don't want to commit to a big trailing stop type trade, because I'm now expecting short little moves upward as it retraces on the 5-minute chart, and so I can take advantage of those little moves with starting to do target type trades again. So you always want to tailor your trading style to what it's doing on the big picture, the 5-minute chart, and then just apply that, how you would trade that 5-minute chart, apply that to your techniques you're using on the 1-minute chart. So let's see here. I'll just wait for a fractal or a 1, 2, 3 hook formation to form before because I'm not totally sure that that's a until you get that crossover, you're not sure that that's actually a trend change yet. Even though it's made a trend change formation, that can still fool you until it's fully committed. You're kind of in a risky area here, but you can trade just so long as you're aware of the risk you're taking. For example, I moved my stop losses down, knowing that I'm probably going to get more of a retracement, but the bet here was that it would hit my target, because I have the target placed at only 3 points, and the market's so volatile that it's a pretty good bet you're going to get your target hit. So I'll continue it here, and right now what I'm looking for is that crossover to occur first before I commit to any more trades, and then I want to see a hook formation. So for the sake of time, I'll just speed up through that, since we know what we're looking for. Okay, see how it's made a hook formation? Now that really hasn't crossed over yet. It's trying to bend downward again. So you really got to be careful to have those crossovers occur first, because you don't know where that number 3 point is going to form yet. So don't assume it's right there until it stops moving downward and starts upward momentum again. You always want to wait for that momentum. Whoop. Okay, I might miss a trade here. I'll just keep it sped up. See that if you assume that was the move up, you tried to make a same bar entry there, you're gonna get screwed over by this next bar, because it hasn't fully made that number 3 point yet. And where I want to enter is when that crossover, it's committed the crossover, the crossing over, it's got momentum upward, and that hook is fully formed. I'll just slow it down. I still don't like how flat this line is. I want to see this ADMA line, I want to see it moving up. Remember that classic picture of the alligator mouth opening? I want to see that first in an upward direction. I don't want to see them both going downward before I enter that trade, because like I said, it's still on a 5-minute downtrend on the 5-minute chart, and so I'm really cautious about trend changes when you've still got a strong downtrend on the 5-minute chart. I want to see it trade right through that ADMA line with it opening up right there. And even then, I probably got in too early on that. We'll see. That's okay. I'm not satisfied yet, because you can kind of tell it's really hesitating here. You know, it could easily go back down. I want to see it really commit to a trend change. I don't like this movement against me here, so I want to wait for all that to just get it out of its system here. I want to see a positive thrust up through that, probably the previous close here, or the previous open. It's still negative, still moving downward. I want to see that line start moving upward. Get my cursor on the buy in case to be ready here. Okay, that's looking pretty good. Could be wrong, but there's always a bad trade in the bunch. Yeah, there it goes. No doubt about it there. That's a positive movement. So we got that one. So I'll just speed it up till we get the next hook formation here. See, we already know at this point we've got the number 2 point in. We've got it hitting the upper Bollinger Band and reversing. And so now we're just same old thing. We're looking for that number 3 point. But this time we've got good separation between the ADMA line and the 14 SMA line. And so, but I still want to see the same thing. I want to see that come pretty close to that ADMA line and then reverse. And then I want to trade the momentum upward. So I'll just slow that down. You probably could change the targets to 5 points here and it would work out really well, but I'll just stick to what I was using on Friday. Okay, see how we can already tell that tick is wanting to move up. And so that tells me that next bar is going to try to move up and break above this resistance point of the last bar, of the previous bar. There it goes. So we're already into our target just as it broke through that resistance. So we've probably got this distance to go to the next target. So we're probably looking at the next target as being up here. But as far as the target that I set for my my settings, I've already artificially set it to 3 points, which in this case worked out because that's all it really went. It looks like it's making a similar formation as it made. Sometimes it exhibits the same characteristics as it has before. It's made that big tall bar. We know what happened last time it did that. So I'm just going to assume it's, well, I don't like that look. Again, I entered that trade a little bit early. That was a little bit impulsive. I should have waited for that momentum to come back through it. But that was a pretty good entry because it's just below the last close at the new open. And I'm just going to try to keep doing that process right there as long as it wants to let me do that. Those types of hook entries. And I think I probably missed a trade right there, but that's okay. I don't want to enter normally. I know we've probably got this distance to the target from this point, or this low point here to this point should equal about from this point to this next target, but we're getting close to it, and so I should have entered probably here, even though it's close to the upper Bollinger Band, thinking that you still got some room to hit that target, but at this point I'm not too sure about it, so I'm just going to let that pass. I'll just wait for the next hook to form here. See, that was a good decision, because anytime you get close to that upper Bollinger Band, usually a real bad time to enter a trade, because you're going to have to wait through this movement right back to the 80 EMA line. See, right now it's getting close to where I'm looking for a new P3 point again, but as we're getting remember, there's going to be about 3 hooks per. That's the general rule. Is about 3 hooks per trend. So we're into hook number 2, or actually hook number 3 right here. So now I'm getting a little bit more picky on my trade entry points. This is when you start looking for maybe a crossover of the 80 EMA line and trend change. And maybe because right here we're on the 5-minute chart, we're right up against that 80 EMA line there, so I'm starting to expect a bounce back down into the 5-minute trend. So yeah, this next trade I'm going to be really cautious with for those reasons. So if I miss this trade, I miss it, just let it go. I'm not going to be a same bar entry trader right here, just because I'm expecting a bounce. Even though that looks very good. Okay, that looks pretty good too. But I want to see it move through that 8 EMA line, make a number 3 point, then try to move back up through it, and then I might be interested in that. Otherwise, I'm not really trusting it at this point. See, and that probably would have worked right. Yeah, that would have hit my target. I just didn't enter it, but yeah, that would have. According to the rules, I had no reason not to enter that trade, so I just missed one. But sometimes you miss them just because you're a little bit paranoid. Right here, what it's doing is it's crossing through that 5-minute 8 EMA, so I'm looking at a reversal here on the 5-minute chart. But in order for a reversal, it's got to make a 1, 2, 3 here, so I'm expecting another down leg on the 5-minute chart. So that's probably going to come up to some point here and then reverse on the 5-minute chart. So yeah, I'm expecting that here. I just missed a trade. Oh boy. I would say in reality, I'm still a little cautious for the same reasons, even though that could be a number 3 point, and that's looking very strong. But we're entering mid channel here, mid Bollinger Band channel, and I'm probably going to miss another trade, but I'll just for safety. I'm expecting a trend change, so yeah. What I'm not liking here is these Bollinger Bands are starting to bend over a little bit, and I don't like the entry point there. Again, that would have been a successful trade. I would have hit my target in my settings. But oh well. We're already up 1605, so it's a good point. If you're trying to protect a profit like that, you really start wanting to be cautious and not wasting your money on little trades, that you're not sure of. So better to be more picky and more cautious when you're trying to protect that profit. At least that's my thinking on that anyway. I'll just speed it up here. I'm not sure how much longer I should continue it, because basically it's the same thing, but I'll just try to take it through a few more trend changes. You see how we get that drop and this Bollinger Band is starting to bend inward? I mean, not the Bollinger Band, the 8 EMA line. And the Bollinger Band is starting to curve a little bit, but when you get a drop like that, that's a red flag that, okay, now I'm looking for if there's another number 3 point, I want it to form below that 8 EMA line and then come back through it. But by that time, we'll probably be looking at a trend change. So let's see here. Continue. Yeah, that's really got good momentum down. It's really trying to take that 8 EMA line down. So in order for me to, let's say I've got that side picture right there. For me to enter that trade to the upside, if that was number 3 point, I'd have to see it reverse and then take out the high of the previous bar, because I want to trade that momentum into a breakout towards the high. If it's just dropping like this, there's no telling where that number 3 point is going to be. So look how far we've already come down. In this previous move up, it was about from here to here. We're almost at the halfway point in the retracement, and when you get below that halfway point, that's pretty strong sign that you're looking at a reversal there, if not a full trend change. See, that's really looking weak right there. So I can't trade this bar. I definitely know that right now. Can't trade this bar because look how that's narrowing. You got to wait for this to play itself out. Not satisfied it's quite made the crossover yet, because it hasn't made a 1, 2, 3 formation yet. So normally you'd expect a leg up. If it is a 1, 2, 3 top, you'd expect that to be the number 1 point, number 2 point, and then another leg up to the number 3 point. But we're not getting that yet, so I have to wait for that crossover to occur first. And usually when you get a drop below the 14 SMA line, that's a good sign. Okay. So I'm watching for it to pull right through that low, and that's satisfied me enough that that's a crossover here. Usually I can trade the first bar before it makes the number 3 point if the crossover occurs first. That's my general rule for that. Yeah, look how weak that is. Okay. Yeah, it's really not giving us an opportunity to enter there. Oh boy. I had it sped up, and so that might be a good trade right there, but Yeah. Missed another one because I had it sped up. Okay, that looks like a little 1, 2, 3 point there. But see, I don't like when the 80 MA line is on that side of the 14 SMA line. I don't like to be trading unless I'm trading on the side of the market this 80 MA line is on. So yeah, that looks like, technically you're probably going to get away with trading this as a 1, 2, 3 bottom, but that's not well formed there, and so it's just too random. That does look like it's trying to cross over, and so according to my my model here, that would be comparable to this look here, but look how the 80 MA line in the model is curving inward, and here we just it's so flat. These are so flat. The Bollinger Band is flat, and I don't feel comfortable assuming that's a trend change right there. So I'm just going to treat it like congestion and not get involved until I see a clearly looks like a formation that I'm used to. Now this is a larger 1, 2, 3 formation right here, 1, 2, 3 bottom, and this would be comparable to this pattern at C right here. See how at C it kind of meanders through the 80 MA line and the crossover. That's kind of what I think this looks like right here. And so on these, I want to wait for the crossover to form first before I, try to trade, because essentially we're trying to trade at the breakout of that number 2 point, and you can see it's got a long ways to go before it hits that, and so odds are all the momentum is going to be spent before it gets to that point. I kind of look at it like a physics problem. You want to wait for the breakouts to be close to your trade entries to be to not be so far into the move. And so in this case, I'd wait for the crossover to occur first before I try to trade the breakout of that number 2 point. Didn't even have to worry about it because it didn't even get there yet. So now we're getting close to the crossover. I'm just pausing for a few minutes here to just kind of wrap my mind around what I'm seeing here. What I'm seeing are these Bollinger Bands converging, and I'm seeing congestion. Usually you can tell congestion. It usually starts with a large bar. It's like a measuring bar, and usually they call it a measuring bar because the congestion usually forms within that bar. The open and closes of the congestion, if you notice, they're all within the range of that. The initial bar, and it's all flat. And you'll get another sign of congestion is you'll get alternating price bars. So you get these open and close are down. Then you get open and close up, open and close down, open and close up. And you'll also get these doji, Japanese candlestick trading names these cross-like formations as doji bars, and those are common in congestion areas too. And the best way to handle congestions is to trade the breakouts. See, you have a flat, usually an area of support and an area of resistance, and rather than get involved in trying to trade in between these areas, if I recognize a congestion area is occurring, usually it's indicated by this narrowing Bollinger Bands, and even though that looks like a crossover that we'd be wanting to go long there, I'm not convinced of it because I see the breakout is up here. I want to see if it's going to cross over. I want to see a breakout above that resistance. I want to see a breakout below that support if it's going to continue downward. So this could very well be a fake out, what I call a fake out crossover. And the thing on the 5-minute chart, it looks like it's about ready to cross over there as well. But we're also seeing a 1, 2, 3 formation to the downside. So there's a lot of ambiguity here that tells me, hey, if there's any question, don't mess with it. Don't trade it until you see a certain sign. And so I'll just continue there. Okay, if I traded right at that crossover, and you could see it exactly at that pinpoint where it occurred, that would have hit my target right there. But again, I'm trying to protect this larger profit, so anything that I have any doubts on, I'm not as willing to trade. But you can see it's still working. The system is still working beautifully at showing exactly where those crossovers are going to occur, and that would have hit my 3-point target had I got in right there at the crossover. And I'll just slow it down. But we're still within that congestion area. We still haven't broken out of that resistance line and support. And we still got this really narrowing Bollinger Bands, which indicates decreasing volatility. So I'm not willing to, until we get a fractal after the crossover, I'm not willing to trust this yet. I think it's better to err on the side of caution of being paranoid than just kind of just trading everything that you think that everything that you might have a little bit of doubts with. No reason to trade anything that there's doubts with, and take that risk. See how, even though we got that crossover there, the Bollinger Bands are still narrowing down and flat. In order for it to look like a good, I'm waiting for the trend to resume. I don't like trading when it's flat like this. When the 8 EMA line is laying right over the 14 SMA line, I never like to trade those. That's another way of identifying congestion right there. When it's just flat, moving sideways, you've got a lot of alternating opens and closes, and it's in a short range between resistance and support. That's generally referred to as a congestion area, and those are extremely difficult to trade because you can see it's just swinging right either side of that center line, and it's not swinging, not necessarily hitting your target each side. So it's kind of a guesswork until you start getting it to start trending again. And the trends will start when you see these Bollinger Bands opening out like a bell. Looks like a bell end. It'll start opening out again. And that's and when you see that the gator mouth opening from the 80 MA line to the 14 SMA line, that's a sign that you're resuming a trend. And then I'll be interested in taking that trade again. So you've got a little bit of the Bollinger Band opening and the gator mouth appearance here, but that would have been a good trade right there. But at the time it crossed over that 80 MA line, it wasn't looking like that. So yeah, that's just basically a missed trade. I'll just let that one go by. Again, I want to see a 1, 2, 3 fractal formation in a strong uptrend before I'm willing to go long there. And again, we haven't really made a committed breakout of that congestion area. And it looks like it's just still flat, and then it's looking like it wants to try to cross over to the other side again. See how the 80 MA line is just flat? I don't like the look of that as it starts to move in towards the parallel, and then starts to move in with the 14 SMA line. So anytime the market's flat like this, you just want to really, unless it's got a good range where you can trade each side of the center line, you really want to stay out of those and start focusing on trading the breakouts. Congestion areas are just a part of the way the markets move. There's always a point in the day where it's gonna be doing that to some extent. So you just got to recognize them when it occurs. And there's no reason. You've got so many other opportunities. There's no reason to trade in this congestion area. But now, look how we're getting a breakout of support there. Okay. So that's my red flag alert right there. We're getting a breakout of support. And the real tell if you get a breakout below that support. But again, I'm going to have to see it a fractal form, and it's going to have to be close to that 80 MA line in the downtrend with the gator mouth opening. And all those requirements have to be in place before I'll feel comfortable taking that trade. Or I could take the trade out, the trade through the support would be a good trade. Even though that's at the Bollinger Band. If it looks like it's breaking through that support, okay, I'm convinced. And watch me get a bounce here. That's just looking. The reason I did that, normally you don't want to enter a trade at the Bollinger Band, but I'm seeing a break through the support area here, and that's usually good sign I'm going to get at least let me move it down to 3 points. At least my 3-point target got hit. So again, so a lot of the same stuff we're looking at. You can see a close outside the lower Bollinger Band, so anytime you see that, you expect a reversal bar. And A lot of these little subtleties are just stuff that you pick that are in addition to the method, but it just comes from observing the market a long time. You start noticing these little tells, and it's very difficult to put down in writing or a set of rules. But there are things you just start to notice about when the market is about to reverse or it's about to come back and make a number 3 point. And in this case, anytime you see it close outside the Bollinger Band, you expect a reversal bar. And I'm also expecting, after a breakout has occurred, you always expect to see a swing, come back and try to hit your previous what was previous support now becomes resistance. That's the rule, kind of the general rule of trading, that old support becomes new resistance and old resistance becomes new support. And that's been true for maybe a couple hundred years, or when they first start charting the markets. It's a really old principle. So we'll probably see this line come back to where that old support was, and then start down again. So that's what I'm looking for now, which is also concurrent or simultaneous with the hook formation. So a lot of times you'll see the multiple signals occurring at once are always the best. In that case, it did continue a little bit after the close outside, but it's not an exact science, but you know to expect that reversal bar at some point in there. And that's what it's doing now. It's got that reversal bar. So that's close enough to that ADME line, so I know that if it starts dropping through that previous close, if that tick starts dropping downward with momentum, it's going to pull that ADMA line down into it, so it's going to look like it touched it. And that's kind of what we're looking at, a bounce after, and it's also simultaneous with the previous support. So all those indicators right there tells me that this is probably bouncing down again. So that's probably a number 3 point right there. And if it happens on the same bar, that's probably a good entry point right there. If we get a little bit of downward movement, that's the momentum that I'm looking to trade. So I'll get ready to sell. We'll see if I got in early there. Yeah, it moved down just enough to fake me out, and then now it's going to make me wait through that. And that's a good example why why patience is a virtue. You want to make sure I did exactly what I said I was trying not to do. I jumped the gun on that one. See, ideally that would have been the entry point right there at the 8 AMA line, but I just got in a hurry. volatility is good enough today where I probably I can get by with a few mistakes like that, but you don't want to do it too often. So now I'm just looking for the same thing we always look for, is just another hook formation in a downtrend. And you can see it's resuming on the 5-minute chart, but we've got support right here at 7,440 on the 5-minute chart. So I expect we've got at least to drop down to that next support level. And so it's probably good trading until you hit that point. So I'm just waiting for the hook formation on the 1-minute chart, the minor swings. A lot of this stuff is so redundant that after a while it's just the same method over and over again. But that's kind of what you want. You want it to be a kind of a method, a cookie cutter routine that you always can apply to every market, and that's how you know you've got a good system there. Got my mouse on the sell button because I'm expecting another, at least another down move here. My goal is I'll try to get it up to 2,000 before I end this video. I was going to make it a lot shorter than this, but it's kind of fun to see how far I can get it. Because that trend is steepening, I didn't wait. On this one I should have waited because it wasn't that steep yet, but we get that huge thrust downward. And on these, usually when it gets steeper like that, you can get away with entering the trade a little further away from the 80 MA line. Just another one of those little things that you pick up on. We're not quite on. If you look on the 5-minute chart, we're not quite to the support yet, but it's getting close. You still got enough room, where I'll get another few more hooks out of it, or at least one more hook down to the support. Oh boy, I missed that one. That's how quick they are sometimes. Oh well, I'm not going to try to chase it. You don't want to. That's another mistake. You can try to chase the trade if you miss it at the entry here, and try to get in too late as it gets close to that Bollinger Band. Yeah, so if you miss it, just let it go. I'll just speed it till we get another hook. Probably missing a lot of good trades right there. Just broke through that previous support on the 5-minute chart, as you can tell right there. And so I think this right here, we're getting the bounce, even though we already broke through that support. It's still bouncing. And anytime you encounter resistance or support, usually you're going to get a reversal. So it could get a little bit of a 1, 2, 3 formation here. See how flat that Bollinger Band's coming? And you've got this spoon-like appearance when the trend change. When you start getting into a trend change, it looks like a spoon. It'll start flattening out. The ADMA will start bending inward, and you'll start getting the Bollinger Bands narrowing. But I have to see a breakout of the previous resistance areas here, and I'm gonna have to see the ADME line bend in a lot more than that. This is one of those type A entries here. I'm going to be patient because I'm not sure that's bent in enough yet where I feel comfortable going along on that bar. I've got my cursor on the buy. See how it's not really a true 1, 2, 3 bottom, but sometimes you won't get it nicely formed like you like it, but it'll still be good for a quick trade. There we go. It actually hit it. It didn't get it out. Didn't exit the trade there. I think that's probably good enough for now. Oh well, maybe I'll let this reversal play out a little bit. I know I've been going really long here. Okay, again, I'll forward it just for the sake of time. All I need is one more good trade and I'll be at 2,000 here. Again, that would have been a good one right there. Missed that one. The only reason I'm missing these, by the way, is because I'm trying to rush through it. We got the cross back over. So we're in kind of right here we're in a trading range where it's not making the typical hook trade formations until it starts trending again. Okay, it's getting close to looking like it's getting back into a trend right there. It's still kind of flat, so even though that might be a number 3 point, yeah, it's too far away from the ADME line. I'm talking about the close, and it's too flat for me to consider that trading that close there. See how normally if that was trending steeply, I'd probably go short right at that close, but look how we're trading right into support. So I got to see a breakout through that, and I got to see that trend really start to resume before I'll feel comfortable going short. And I'm gauging that by, look how close we are to that Bollinger Band. If it's flat, you don't want to trade towards the Bollinger Band when it's lower than your target, set target. So that would be lower than 3 points. Now if it's at a slope or an angle, you can trade even though the Bollinger Band's very close to the target, but we're not really at a trend here. We're not really broken through that support level. See, now, even though this might be a trading range, if it were to resume, it's still kind of it's still a meandering trend. If you look at the 5-minute chart, it's kind of a meandering trend downward. So I know it has a downward bias to it, and you can just tell on the 1-minute chart that you want to be trading in the short direction here, because just look at the way it's sloped, and yet it's still a little bit too flat to trade when it's really close to that Bollinger Band here. Right here, I've got some good distance starting to build up between the 80 MA and the Bollinger Band, so I know that that's a good probability for a short trade if it starts. If the momentum starts out again, moving downward. So that's what I'm looking for there. If this were a crossover, I would have to see a 1, 2, 3, and I'd have to go through that whole process of seeing a defined 1, 2, 3 bottom, and then the 8 EMA crossover. But what I'm seeing here is that it's opening up in a new downtrend direction. Everything about this tells me be ready to be short. Be ready to sell here. That could be a sell entry. I'm just being extra patient here. Oh well. That was probably too early, but I usually don't like it when it makes you wait even this much. You know, it creates a lot of anxiety if you're too early in a trade, and you don't wait till it really has momentum. The ideal entry is when it really starts to move, and then you catch it just as it's got that momentum in the direction you want to trade. So I don't really have that here, but I like what it's doing now, so it's just going to take its time. It is kind of a congestion right here, as you can see by the definition we had of doji bars, and you've got oscillating highs and lows within a flat congestion area. So you could actually trade the breakout of this congestion right here that's consistent with a downtrend direction. you'd want to trade the bias, you know, that you're seeing on both charts towards the downtrend. I'll just put my target down lower. As a matter of fact, no reason to re-enter it if I'm just going to plan on trading that breakout anyway. So I'm trying to trade the breakout of that support, and so rather than re-enter the trade, I'll just move my target lower. Look at my enormous stop loss area here. I'm really risking that final, trying to get to that $2,000 mark. It really hasn't broken below the support too much yet. What gives me confidence is on the 5-minute chart. I'm seeing that downtrend is still really strong over here. And look how it's trying to break through support right here. This will be my final trade. That's all I need, is it just hit that target, and then we're at $2,000, and we've done it in less than 2 hours. Even though it's over the Bollinger Band here, it's broke through support. So look at that. We met our goal. And so this is probably a good point to end the video here. And if you stayed with me this far, you're interested in trading, because it was, for everybody else, it'll be extremely boring. But have a good one.